Alrighty, it is the end of the week, and a lot of yous are already closed, and we're just opening up. We're at the beginning of the game. You're at the end of the game. It's okay with me, or in the middle of the game, however you want to look at it. But this is Doc from North America on a Friday, and we're going to look at the markets as we usually do. We usually take everything apart. So, good morning, good afternoon, and good evening somewhere. All right, there's the dollar index again. Oh, let's get the chat line up. Yesterday, I think I went 10 minutes without the chat line up. What was I on fire about yesterday? Probably technical analysis. I know we labeled it as technical analysis. And we were talking about pairs trades the day before that. We were getting involved. There's Robin. Hey, Robin! I like that. Put that up there like that. Like to review a specific market? Question mark. Ask Doc. Ask us. We're always willing to talk, discuss, figure out, speculate. Always wondering. And then we have the primer. We have our mathematics that makes a lot more sense out of everything. And we just kind of use it as a consistent tool. Imagine if you were trying to figure something out and you had a tool that would be able to resolve it almost 9 times out of 10. That's how our math works. Almost 8 times out of 10, 9 times out of 10. So we say 8.6 to be exact. And we can pretty much feel comfortable that almost every product will fall. If it's a liquid product and it's active on some level, decent level, realistic level. I mean, think of, like the Chinese yuan is, almost impossible. It works on it well, but it's still impossible because it's a fixed thing. Then you take a look at the euro, the second most active currency in the world. Compared to the Chinese yuan, is only trades about 2.5 to 3% of volume every day of the world volume when it comes to currencies. And then like the second most active currency behind the euro is the Japanese yen. The Japanese yen is the second most active currency behind the euro. And then obviously, the American dollar is number one. That's why we get stuck looking at it every day. And then, then we go to the euro. From the euro, we look at the yen. And from the yen, we go down to, actually, the third most active currency in the world is the British pound. Sometimes it's good that I remind the world that when they listen to the webinar to understand that. Because, you have this, what we refer to as spin. Spin. And did I mention the AI situation yesterday? I think I did, didn't I? In other words, you have this spin. How do you go from talking about currencies to spin and AI? That's a definite quagmire for a lot of people don't understand or pay attention to our reality. Doc and Robin's reality versus the rest of the world's reality. And what it comes down to is that the currencies, as we're labeling them now, it makes up the dollar index. The dollar index is made up of 53% of the euro. Then it's something like 18% of the yen, and then it's something like 12 or so percent of the British pound. And then from the British pound, it goes down to like 8 or 9% of it is the Canadian dollar. And then the last two currencies in the dollar index is the Swiss franc, which is 4%, and the kroner, that's 4%. And that makes 100% of the dollar index competing against the dollar. And so when you're looking at the dollar index, that's what the future is made up of. It's those 6 currencies. But if you listen to the commercial media here in the United States, or the state-sponsored media we call it nowadays, they'll tell you that the Chinese yuan is the number one, second most powerful currency in the world, and China's the second most powerful economy in the world. They'll tell you all these things that are not even realistic or any type of form of reality there. But that's the currencies, and that's how we look at this every day, because these are the facts. There's not a fantasy there. This is a fact. And that's what that dollar index confirms as a fact. Because, they're not exactly trading Russian rubles and South African rand and and the Chinese yuan is not the number one currency in that index. It's not even in the index. It's so bad. In other words, it's very unproductive or unrealistic to be considered anything describing what's going on the planet Earth. If you landed on Earth and you said, okay, how do you transact different things? They wouldn't say, okay, you go grab some dollars and grab some Chinese yuan and you'll be able to do anything you want. It's like, no, it doesn't work that way. If you buy euros, you'll be able to, get a hotel room if you're an alien from some part of our solar system. I don't really believe any aliens are not from our solar system. If there's aliens, they're from our solar system. So they're probably already used to using the dollar. So there we are. We're looking at the dollar index this morning. You see it's still firm because the numbers yesterday confirmed that it seems like there may be a cut of 3 times this year. Maybe. It's still, I'm not totally convinced of that. We're going to start seeing, again, we're going to see core inflation in the 3-month average exploding up for the next 3 months. It's going to be very hard going into, see where we're at now. We're March 1st, so April 1st, May 1st. The next meeting is in end of May, beginning of June. They're going to have a hard time being able to cut the interest rates. So we're looking at the dollar, and when you're looking at the dollar, you're really looking at the interest rates on the planet. That's what we're really looking at. We're looking to see where money can be parked and you can get a return, something called a profit. Hello, profit. A lot of people have lost the idea that there's a profit in things. They think that they think, the classic saying is buy low, sell high. Everybody thinks of that, buy low, sell high. And then 9 out of 10 people have no idea that you can sell it high and buy it back lower. That's called shorting. So there's 2 ways of making money in what you would consider like a hard delta transaction or a transaction. We call it a hard delta because we're also option traders, and that's derivative traders. And so what we're doing, we do it all. We do the hard delta, we do the soft deltas, the derivatives, they're soft deltas, and so forth. And you can find a hard delta derivative. That's a futures contract or a forward contract. But overall, there's a lot more tools. Not a lot, just a couple more. Everybody knows buy low, sell high. Yeah, that's a great idea. And then there's another side of that, which is the mirror image of it, which is you sell it, but you don't own it, and then you buy it back. And then there's what we would like to use the French word tranche. There are slices of different types of things you can buy or short, and they're called options. And they're in the category of a derivative, a second characteristic off of the first, the hard. And that's how that all works. So anyway, we're talking about poor aliens landing on Earth, trying to get a hotel room, and they want to use the right currency. And they don't have a Visa or a MasterCard or a American Express. So they want to have the actual currency so they could pull some coins out of their pocket, maybe gold. They picked up gold on one of the planets in our solar system, whatever. End result is that these are what make up the dollar index, those 6 currencies. So when we stare at that in the morning, I don't want people to go, wow, that's really neat. What is it? I want them to understand what it is. It's the euro. It's the European currency, the second biggest currency on the planet compared to the dollar, and the Japanese yen, which is considered a massive carry trade by many because of the zero interest rates and the minus interest rate factor. And then there's the British pound, the Canadian, the Swiss, and the kroner. All right, I think I've got that off my chest this morning. And so what are we doing when we look at the dollar index? We're really looking at the rate of return or the value of return. You buy a dollar and you got nothing, and you only need X amount of dollars to do something. You put the other dollars in a bank or you park it somewhere. You buy something with it to be able to get more money back. I know that's somewhat of an alien concept, and I'm not talking about some of our neighbors throughout the solar system. I'm talking about the idea of since we've been in an era now called quantitative easing, not everybody gets interest on their money. They don't get a return. Now, of late, because of the inflation, it has forced people getting a return on their money, which is really cool. That's the way it used to be for over a millennia or more. Or millennias, more like it, many millennia, since I guess you could say since Abraham bought the cave away from, I forget the fellow's name, but they actually have that written down on what he paid for the cave so he could park his wife in there when she passed away. And so, the idea is people have always known about interest and so forth and getting a return, growth. And that's why the dollar index is going up, because it has a value to it more than the other currencies. It's paying a higher interest rate, and that's what we could put all the listed interest rates on there, and which one equals the most liquidity and the best interest rate will kind of show why it's going up in value. All right, I'm done with that esoteric riff what I just got done saying. And so we'll just go now look at these things, and if anybody's out there who would like to understand what we're mumbling about, what we're talking about, what we're trying to describe, just ask a question. We're always glad to answer, and I get my opinion, that after seeing people ramble, we're in a very literal society and a very connected society, so we have incredible amounts of information coming at us every day, and there's no doubt about that. Some of it makes close to no sense at given times because there's spin or propaganda or whatever you want to call it. As I take a sip of my coffee there. And so that is what it is. All right. So there is the dollar index. You can see it on our beta platform. We're trying to get our platform. Yesterday we were really battling with the code, trying to get it straightened out. Notice that right here in the second, there's let's see if we can do this. Go like that. And you can see this is the weekly algorithm giving you direction. This is the daily algorithm giving you direction. And this is the actual chart itself of the open, high, low, and close. And the dots kind of tell us about the trend. Notice when you have a lot of green dots, they seem to want to go up in value. Notice when you have a lot of red dots, they seem to want to go down in value. And that's the way it kind of rolls. All right, now from the dollar index on our beta platform, we jump over to our main platform at the moment. There's the dollar index, trading at 103.98. Usually we show you that also on the J4X, but right now we're having a problem getting our J4X up for the last week and a half. We'll go after that when Janos comes back from wherever he is, and we will get that resolved. So right there you can see the dollar index kind of drifting up, I guess you could say, because again, interest rates have been going up here in the States overall. Now you can see from here to there, obviously interest rates were going down. They were all excited about the idea of possibly a cut. But that's not happening. And the same thing from there. And when we tighten it up a little bit more, you can see that the product really was getting slammed for a while here. You can see that way out there as we go back to October and so forth. And you can see that then it was the fantasy back in last summer. They thought, oh, they're going to cut the rates. And then they started realizing in August, September, they're not going to cut the rates. Then they started thinking again, we're going to cut the rates, and then they found out that they weren't going to cut the rates. And that's where we're at the moment. They're not really going to cut the rates, but there's a fantasy out there that there could be a cut in June. They say it's a 50-50. And they actually buy a product to profit from it if it does. So that is the thing altogether now. All right. From the dollar index, we take a look at one of the components inside the dollar index. We go over and we look at, and here we go. We're nowadays, this started about a month ago. We used to do it years ago, but we look at intraday action just to show people that the random walk, it's one thing to look at dailies and weeklies and be accurate. And people would probably go, yeah, right, okay, don't really look that close to it. But here is a live trading of the product simultaneously. This is a 23 tick. No, it's not even a minute or 2 minutes, 3 minutes. It's 23 ticks, creates a new bar. Each one of these bars is 23 ticks. And here is our algorithm, just like you see it right there. You see our algorithm in the middle there, algorithm in the middle there. And when we're on the beta, you see the same situation right there. You see the center algorithm and the weekly algorithm, which is supposedly they're going to change that from low frequency and high frequency very soon. They're trying to work on that. Yesterday, we were trying to get that changed. It's been a real, we've invented this platform ourselves. So we're, believe me, it was a Herculean effort. It's like, let's go build an automobile. And you need wheels, and you need bearings, and you need, oil, and you need grease, and you need screws and bolts, and we've built our own platform. We're trying to get it to work, and it works pretty accurately. It's a little delayed in certain spots, but overall, it's pretty damn accurate. Because it's our math, and our math is pretty damn accurate. So that's that, and so there is there, and then this is this, and this is it live again. This is live right here. This is live, but this is the daily right there in the center, and this is the weekly. So it's it's moving at a turtle's pace, I guess you could say. But here you can sit and watch it tick away live. So it went into the sell right here when it goes below the zero line, just like on the other platforms or the other platform. It goes through the zero line, and the blue line is both underneath the gather, whereas it wasn't here. It was just warning us it was breaking down. But when it confirms there, then you can be short. You can play the downside like as if you were buying it to make money on the downside. And you can see it goes down in value just as when it went into the buy right there. Obviously it went up in value, and when it went into the sell right there, you can see it went down in value, and so forth and so on. And you can see the accuracy of that 8.5 out of 10. And that's the explanation this morning. We're just into that, trying to make things coherent. You got to imagine my voice might be young, but I'm heading for 70 years old, and so is Robin. He's a little over 70 years old. So we've been traders a long time, market technicians a long time. Our experiences are over 100 years together, and so, 40 some odd years for me and 40 some odd years for him, and it's been a long time. Long time. So we're here in a combination of entertainment and making some money. We're doing it all. It's what old men do. And so there's the dollar index and the tick per tick, and it's so quiet. Look at how quiet it is. You can see it right there. It says 12 ticks. It's quiet, and we're waiting. Now, if we go over to the euro, which is the second most active currency in the world, we'll show you. That's 986 tick. You can see there's 53. Let's see if it starts ticking again. There's 24. And 24 will close it, and it'll go to 986. There's 5, 3. It's already blown through the 986. It did another 100. So, and there's at 886, and it'll drop down a few seconds from now again. There's 810. You can see it's ticking away like a clock in its own way. That's the way we measure things in what we call spatial time, not your classic Newtonian time. And so we commingle with the idea of the physical and what else could I describe it as? The physical. And we change, and we have we have a formula here we've been using for decades. In the beginning, it was to challenge the accelerator concept in atomic particles. But we put it to this, and it's been pretty accurate. So it's pretty cool. And you can see here's the intraday. It went into the buy right there because both are above the zero line, and it was in a buy all the way to there. Notice it had a habit of going up in value. Notice when it went into the sell right there, it had a natural tendency to go down in value. It went into the buy right there, and it stayed in a buy up until that point right there where it went into a sell with both of them underneath the zero line. It lasted one bar and went back into a buy and went up. So there was a loss right there. Okay? So you just saw like 5 trades, and one of them was a loss. And then you take a look at the 6th trade right here is a win. And then you see the 7th trade right there, and it's a win because it doesn't go back into the buy until right there. So it is downwardly in value. Then you can see another one right there. It goes up in value, and you can see the clock ticking away, if you can want to call it the clock. You can see the contracts trading. And that's live. That's what it is. It's live right now. So when you go look at, what the hell is that? 502. Let's fix it. Oh, wait a minute. That's the S&P 500. That's not the that's the S&P 500. There's the euro. No. Yes. Where's the euro at? Oh, right there. There we go. There's the euro. Okay, so that was the S&P 500. 9 out of 10 times. Or 8.6, we like to say. Same thing there. There was your buy way back there somewhere, and that whole ride went up to there. Then it went into the sell right there. Went down in value. Then it went into a buy. It was in a sell for that all the way out to here. There's your first buy right there. Right there. Is that the first buy? Yeah, it'll tell you there. When we hit the box over it, no, that's a sell. And there's zeros, and then there's pluses. Remember, we're moving all the way down to the atomic level in this stuff. So there's your buy. You could say basically right there. It goes up in value, and then it finally goes into a sell right there. It does the same thing as the S&P did, the herky-jerky twist. And it goes up off of the next one. And actually, what is that? That's basically, I say that's a loss. And there's 2 losses right there out of 5 wins. And then you go back into a buy. There's a 6 win right there. Goes into a sell right there. Goes back into a buy right there. It did go lower, so that would be considered a win or a flat. And then there's like 8 wins right there. And then still in a buy all the way up to here, really. There's where your first, you see in the white plot, the green plot, and the blue plot in the box there. You see it goes into the sell, it goes down in value like it's supposed to do, and is still in the sell as we speak from the sale open here. And so there it is. We're showing the intraday live. We're showing you the weekly live. We're showing you the daily live. You know, not what started. You know, let me digress. It's Friday. And back in the old days at Dukascopi, we'd have all kinds of funs and game on Friday. It would be fun. And so on Fridays, I have a natural tendency to want to be a little bit more lighter, a little bit more chill at the same time. You know, have some educational side of this at the same time. And so in the end result is that someone came on. I started doing this Dukascopi thing and the webinars, and there was a guy. He was on there, and I wanted to challenge all other technicians. That was my attitude. The floors were closed. You know, there was no real floor action since the 90s. Basically, going into the 2000s, there was no floor action. The floors were pretty much done and over with. And so, you know, it was an electronic world. We talked about it in the 80s. We saw it coming. And, New York Stock Exchange was sold. It was all gone. ICE owned it. Going into the next century, that type of thing, as I take a sip of my coffee. And there was a fellow on here. He claimed to be a technician. I said, great, let's have algorithm wars. Let's battle them. I'll run my algorithm against your algorithm. And anyway, he kept on changing the parameters all the time to make his thing look like he won. But he would never show us live. So I would put my camera, instead of a picture of me talking and explaining, I would always have charts up there and showing you live action so you could see, real. And so, that went on, and then he disappeared quickly when he realized that he couldn't out-scam anybody. And every so often someone would come in and say, here's this or here's that. And I'd say, great, let's challenge each other, see who has the best algorithm. And then they'd go away. And they didn't have to go away. As far as I was concerned, we all learn. I learn, and Robin, we all learn by challenging the status quo, I guess you could say. And that's really the way it should be, too. You're talking about a real sport here. It's a financial sport. It's the biggest, you can have Nintendo. You can have, Xbox and so forth. You can have all these games. You can have Halo. But they're not real. they're only artificial, and the points are not real. Now there are games out there card games and so forth people play for real money. But here we are challenging the biggest thing of all. Look at that. That's still going down, isn't it? The dollar, this is the euro, the second, the biggest component in the dollar index. And it tried to get into the buy right there, if you notice, but notice that the green was still underneath. So it didn't, you saw that was the warning that there was a little strength kicking in, but it didn't put it into the buy. So it's been in the sell since right here for that whole move down. And you're seeing it live, ticking away. And you're watching over here in the right corner, you're seeing the price of it, 108, 150, 157. You see 77 ticks. You see 74 ticks, 72 ticks. You see it ticking away live. There's action there. So anyway, and the end result is that we try to challenge ourselves every day. In other words, challenge the fact of not counting, having positions on or something like that. We try to challenge the technical analysis every day. Make, in other words, as they would say in the car dealership business, I guess, you kick the tires. In other words, make sure the tire is not going to go flat when you kick it. And so that's what we do here. And we have no problem answering questions. And if we can't answer a question with the most accurate information, we will find it and bring it to you on the webinar here. That's the way we work around here. We're more of kick the tires, make it real, no fake. So there you are. You see, you're watching the euro live through a mathematical primer that some of the best mathematicians in the world don't know, because it's our invention and we use it, and it's a great key. And so that's the way it rolls around here. And so you can see it, how accurate it is, because here we have it live, ticking away right now, no matter what machine you get near, a Bloomberg, a J4X, whatever. And you're going to be watching it tick for tick live against any other. That's why we like to have J4X up on the screen, because we have no control over it. Obviously, we have no control over it. I can't even open it right now. The password doesn't seem to want to work. And so there it is live. So if you're looking at something live, you're looking at this at the same time. You're going, how's it do that? How's it predicting the future? I don't know. How does Riemann or LePlanck or some of the great Euler or Gauss, how did their mathematics become accurate? How did Mr. Newton's mathematics be so accurate on the planet Earth? And obviously when it gets off the Earth, it's a little bit more distorted, but depending on what you're measuring. But there is math out there that can predict certain things, and ours is one of them. We're at 92 ticks, 89 ticks. It's ticking away live. It's still been going down. It's at 86 ticks. Can't wait to see it hit the 986. This is a 96 tick. That's what it is. So it just blew through it. Now it's 80. It'll go through 96 again and create a new bar. There is 80, 78. Let's see if it ticks away. It will tick away to the 96 point again. There's 77. You'll see it go to 0, or it'll blow way through it like it does there, from 77 to 74. And that's 71 now. See that box right there? You can see it right there, can't you? Where's Mr. and Mrs. Mouse? There it is right there. You can see it right over here. Right there, where I'm putting the arrow. Right there. See, right there. 60. See it in the box there. Or is it a little delayed? Let's see. That's 60. Now I'm at 57, 54. It's 57. I see it's just a little off. Now it's at 50 on my machine. It's 54 now. It's that minute. That's why it's so fun to do the dollar index. It moves. We look at the beta of it. The higher low beta volatility of it, and that's how we decide and then back test. And usually they stay consistent forever. For decades and decades. They're very consistent unless they get. And, imagine if China let their currency float out of nowhere and they went to capitalism. Then you would see that currency really lift. It'd be really it'd be in the dollar index. It'd be an action-packed thing there. But right now it's not. It's a fixed thing. They move the price of it once a day, and then the speculators buy it for whatever they buy it for to transact things. And that's why it's 2.5 or 3% of the world volume each day for something that's supposed to be the second largest. Now we're at 6 ticks. Now you can see on your screen it's 10. Now it's 6 there. Now I'm down to 2 ticks. That 6 will go to 2. And now we're at 95. It's jumped. And there you see 95. You can see the little delay of Amazon. No, what is this? YouTube. That's it. YouTube. Google. Boy, did you see how much trouble they got into with their AI? What a junk. Traders, please be careful with this AI stuff. It is more spin, and it's basically like buying an encyclopedia and pretending that it's a mainframe computer. And I'll say that again. AI is like buying a encyclopedia or an encyclopedia program for your computer, an encyclopedia, not a dictionary, an encyclopedia program, and pretending that it's artificial intelligence. It is a collection of information. Consciousness is an intelligence. Our mathematics is a consciousness. And I'll say that again, too. That's a pretty bold statement, and I have no problem being challenged by it, by any physicist, mathematician, or whatever. Any scientist. My math is a consciousness. I don't understand it myself half the time, why it does what it does, but it does it. And so we've got a leash on a consciousness mathematical consciousness that I don't understand even. Why it does what it does, but it's been doing it for me for 40 some odd years. We've back tested it even into the millions. We've back tested it into expanding galaxies, and it predicted movement of the expanding galaxies before the physical reality that we watch did it. So I used Lisa Randolph's work, the head of Harvard's physics department, in person at the time when I tested it back in 2014. And so it always fascinates me. I'm as excited as you are when you're watching something live like this be so accurate. I every day wake up excited to be involved in the markets. It catches my interest constantly, the fact that it is accurate like that. So, this is one of those classic Fridays where we don't have 13 or 14 people or 20 people in here watching. More likely this will be a big remake. And I think what we're going to do, I think I've just come up with the title of today's webinar. And today's webinar's title is going to be, what is it going to be? It's going to be, let's go there. I'm going to type it in at the same time, if I can put my password in right. And I think the title today will be Analysis Backtested 32 Million Years. Exactly. That's what I'm going to label this, because it's a fact. I've done it. So, and we show it all the time with no problem. So I think that's going to be our title today. And that's the ramble I've been on since it's a Friday and we're supposed to have fun and play a little bit. Now, what's up with this thing? There it is. Title. Space. ... Let's see. Analysis backtested. Analysis. Where is it out there? Like damn. Analysis backtested. I want to put that in there so I don't forget. Because if I forget, then I'll be like, "Oh, what was that? What was that?" And I was trying to remember, Believe me, you can interrupt me, and I can go, answer a question. I have no problem doing that. Yeah. Analysis. Analysis. Okay, let's go with that. Analysis. Backspace. 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 Let's see. ALY analysis. Back tested. $32 million years. I like that. I like that. That's going to be our title today. All right. Now we won't send that out until we're at the end in case I change my mind, but I doubt I will. All right. So from there, now that we've got our title, you can see this thing keeps on dropping. So what's that mean? That means the interest rates are rising here in the States again. And what do we must have some numbers coming out soon. Let's go take a look at the Dukascopy calendar and see what's coming out this morning. I know yesterday was a half decent number. I knew that. And so I knew it was on the high side. Jim Muriel. I like Jim. Jim usually tells me what is the best. Robin and I traded with Jim Muriel on the trading floor many moons ago. Let's see. Let's go to the Dukascopy. Let's see right there. Let's go put that up on the screen. Let's see if I can do that right there. We'll put that on there and show you. Let's see. Trading calendar. There we are. Let's show you what we're going to leave that there until we find it. So this week, let's see, where are we at here? Let's scroll that down. This is the Dukascopy calendar of events that occur on Earth when it comes to the financial markets. And there is Friday. Right there. We're going to show you that for a few seconds, and we'll go back to the let's see, let's go like that. Or no, it's not mouse right there. Here we go. There's the Dukascopy calendar. Whoa, what happened there? Okay. So, there's the Dukascopy calendar. And you can see what's happening on Earth today financially. JPY, Currency Consumer Confidence Index was out. And they tell you what the previous one was and the actual. It's happened already. And we scroll down, you can see like there's Aussie, British pound, Swiss, Euro. There is manufacturing in England. That came out already. When they put these things here, impact of what it will do to the markets, they say low, medium, or high. And so we have here, let's see, do we have anything in the States here? We have the Michigan consumer at 10 o'clock our time, which is basically 2 hours from now. That will move the markets a little bit. They have it listed as low. Oh, there it is right there. The PMI. That's high. That could influence the markets over the next couple hours, when it happens. There is the Baker Hughes rig count for the week. That's low. So you notice it's not filled in any of them right there. And let's see, what do we have? We have CFTC gold contracts. When you're looking at the trading in these things, the Commodities Futures Trading Commission will give it to their friends yesterday, and then they'll give it to the rest of us today. And front running is a norm for the government agencies at this point, like the FBI and so forth, and the Department of Justice. They're all evil. All right, so there's a British pound when it comes out very late today. Oh no, it's the I guess it is. Yeah, it must be their commodities group. No, yeah, that's what it looks like. Is that a Swiss flag? What is that? That's a Swiss flag, isn't it? No, it's United Kingdom. Okay, so it's coming from them, and then ours come out here. So basically, watch out around 10 o'clock our time, which is 1 hour and 51 minutes, 10 a.m. These things come out, and this could be some real action there. All right, that's the Dukascopy calendar. You can see it right there. It goes the whole week, and it'll show you what next week's is going to be. We can look at, where's it at? Next week, right there. You click on it on the Dukascopy website, and it shows you what's going on next week. And obviously, we have next Friday. Let's see, what do we have next Friday? Where's next Friday? There it is, next Friday, the 8th. We have a lot of American stuff, especially on the 8th. Average hourly earnings, labor, unemployment rate, they're saying there's a high. It's the average earnings they're watching that they think is important. Hourly out right there. And non-farm payrolls overall is high. That's something that'll excite people. So that's the Dukascopy website. And you can go there to the calendar and check it out. All right, now let's go back to the live. Let's see where they're at this point. There they are. Still, oh, nope. It tried to get in. It gave you the warning. It got up a little firm. You see the movement up a little bit, and then it's trying. Look at this. You can see over here. Can you see that? Yeah, you can see that. Right there, you can see it's at minus 0.00000040. Remember, I designed this for playing around with atomic particles, so it can be pretty extensive lengthwise, how far out it's measuring. or how minute it's measuring. Let's put it that way. Jordan! Yo ho ho! Good morning to you, good afternoon, and good evening, and it's TGIF. Thank goodness it's Friday. We always need a Saturday and a Sunday. In America, we have the Sabbath starts Friday and ends on Sunday. It goes all straight through. We got a 2.5 day Sabbath going on here in America. I love it. All right. Can we answer any question? You just want to say hi? That's fine with me. All good. All good in the hood here. All good in the hood. As I sip my coffee, you give me a chance to say something. That's cool. Where else are we? We haven't even gotten past the dollar and the euro, have we? We're just pretty much there. It's trying to get into the buy. Look at it. It's very close. Look at it. It's battling. It's a battle. It's a battle. It went into the sell right somewhere around here. Around this area here, it went into the sell, and it's been a battle ever since. It really is. I want to take a look at. Let's go take a look at the bond. Ooh, you know what? The March contract, the bond March contract probably is moved into June now. They really flipped that thing pretty quick. Let me go check that out. Let's see, what page should I do that on? Let's go like this. Oh, there it is right there. Let's see. Let's see who the front month is at this point in the 30-year. Yeah, the June contract has been flipped as the front month now. So we'll have to pay attention to that. And let's see if it's reflecting that as we put it up on the beta. Beta, where are you? ZBF? I think it's ZBF. There it is. Yeah, so we're looking at, let's see, the front month is 11904, and the back month is 1903. And let's see what that says. Oop, let's just take that like that. There it is. There it is, like right there. That's the March contract still. No, that's March 1st. So there is the, oh, you can't see what I'm looking at. Right there on the beta. There it is right there. Now we just set it back like that. You see that when this rises, interest rates are dropping. Notice it's trying to drop down a little bit today, so that means interest rates are going up. And that's why the euro is moving the way the euro is moving. And so, you look at that. It went into the buy right there. It did finally make it into the buy. It's into the buy right there, and it's going the wrong way after all this wins, taking some of our profits from that. That's all right. We'll see. It still hasn't closed yet. Let's see what goes. Let's see what goes. Live, like we say constantly. We are live. Live from southern New Jersey. Ah, it looks like it's going right back into the sell. Oh, geez. Obviously, they don't want to see how many ticks is that? It's 70. Let's move that. Why is that hiding a little bit? Let's see if we go like this. If we contract it down. There we go. It's at 65 ticks. Let's see if it's going to bounce back up or what. There's 62 ticks. So it went into the buy for one bar, and is it going to go right back into the sell again? Again? It just is what it is. And this is like this is fast. Oh, look at that. 49 ticks. What's the screen say? 52 at the moment, I see. There you go. It goes to 49 there. And so 46 now. The only delay in this is basically Google. Is it Google? Who owns YouTube? Google. Google, yeah. And the blue line is warning us, that's for sure. And it'll be interesting. It's trying to steal some of our profits. Like a cat meowing to be fed. Or talking to us, either way. Interesting. I don't know. Today seems to be a day to want to be real and fun at the same time. I want to be real and fun at the same time. Now, there's certain points in the day, very few of them I can say, that you don't have to be too concerned. The math will work really nice. But when you come up on, like at 8:15, whatever data, was there data coming out at 8:30? I'm not sure if there was data coming out at 8:30. Usually there's data coming out at 8:30, and there's usually front running to go on with that. You know, yesterday Robin was saying to me they took them down to take them up. You know, and there's always some type of front running to the news itself. My goodness gracious. There it is. It's back in the cell again. Back in the saddle again. La 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 la. That's why we're always singing here. All right, it's in the cell. Let's see what it does now. It's hard to believe it's going to go down more. I guess this is like, you know, there's a couple points in the day before the New York Stock Exchange opens that 10 minutes you want to steer clear of. The 8:30 news you want to steer clear of, which is right now. And remember, the 8:30 news is released to the media at 8:15, and then they release it to their friends and family. And usually there's no indictments or anything like that, as long as they're Democrats that are using it. And we could tell you stories. And I can tell you stories how they don't care, just like the FBI and everybody else in the Department of Justice and so forth doesn't care unless it's a Republican, and then they care. They're the SS nowadays here. And so you can see here it's trying to roll over again. And obviously some information is out there, and we don't see it. And let me go back to that calendar. Do, 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 do. Where is it at? Dukascopy. Oh no, that's not where it is. It's over here. That's right. Go to the Dukascopy calendar. Was there news today? Today, bing. No, I don't see any news on there. Just the 10 o'clock news. So they can't be front running that yet because I don't think it's out. Maybe they gave it to them. I don't know. Is there? And there's no foreign news either at 8:30 either. That's kind of curious. But it's acting like there's news. Huh. All right. Well, we'll just let it be as it is. Keep your eyes out there, traders. Something's brewing, that's for sure. As you can see, they twisted my math there for a second. And it's still, you know, it made a lower low from the sell, but it's vacillating back and forth. You know, it's really trapped. Let's go take a look at the daily weekly right now, just for the sake of being, well, I really wish I had our J4X. That'd be nice. Let's go check that out. Where's that mouse at? There it is right there. No, that's not it. Right there. That's the Turkish lira. Let's take a look at the euro. There it is right there. The euro went into the daily sell there yesterday. And it's really unchanged for the day. It's not really that exciting. You can see here it's underneath the zero line. And the weekly, which tried to get going. That's the blue line there. We changed it to yellow because we thought we'd call it like the yellow light on a stop light. You know, when you come to an intersection, you have the red, yellow, and the green. You know, that type of thing. Or the green, yellow, and the red. And so, you know, basically the blue is like the yellow in a sense. It's giving you warning that the green or the red is coming. And that seems to be the way it's been. And we've been in that weekly sell since up in here. And I forget what that line was for, and I'm kind of forgetting anymore what the big circle I created there was for. Remove that. And then I think we Fibonacci'd it at one point. So that's what you can see right there is the Fibonacci about the way it adheres our math. On the LinkedIn, I always claim that before there was a Fibonacci sequence, there was our what do I call that? The shape and value of time. That's what we refer to our mathematics. The shape and value of time. Isn't that cool? I like that. The shape and value of time. Shape, SVT, I call it. There's another SVT in physics, so I didn't mean to interfere with that one at the time. But it's more descriptive. It is the shape and the value of time. We measure time through a shape. And that's what all those lines and manifolds. This is the yellow lines Robin and I talked about yesterday. The manifolds, when they get tight, usually represent new action coming, and as it starts to expand, you can see this case here, it was in the sell side, and what does it do? It goes down in value. It's the same thing here. It starts to, it's in the buy right there. We put a line in there just to remind you it went into a weekly buy right around in that week. We put it in at the end of the week, and you can see it goes up in value. Then you get a little daily one in the center there going down in value. You can see the breaking down of the weekly, but it doesn't break down, so you know that that's just going to be a higher low. And then it goes up in value again. It goes into the daily buy right there, and it goes up in value, and then it climbs all the way up to there. These are daily bars right there, and these are the daily algorithm, and this is the weekly algorithm. And then you can see, I can see, we all can see. There is the intraday algorithm right there doing the same thing. So fun times for all, traders. Fun times for all. Let's see if there's any questions. At least Jordan said hi. Thank you, Jordan, for saying hi. We're happy about that. We like the idea of someone telling us that someone's out there actually watching us. We see all the replays going on the webinars, but not so much the live. People are probably just drinking this in, having fun. It's like, wow, is this real? Is this fantasy? Is this like SpongeBob? Are we eating in a crab trap? Is everybody walking around underwater, and then there's the squirrel walking around with a bubble on its head, having oxygen? Krabby Patties. I like Krabby Patties. Alrighty. All right. So there it is. That's the, we're back in the cell again. It really hasn't gone anywhere in particular. It's very tight. It's right, as you can see here. Went into the cell on this one. We lost that much right there after making that much all the way down to there. So you got to give up something once in a while, as we used to say on the floor, to the gods of trading. They are mercilessness. They will do what they will do. All right. I think we've had enough fun here today. It's Friday. I want to get out. Anybody have a question? Fire it out now. If not, I'm getting out of here. So I'm going to start singing, and I'm going to publish the title too at the same time. Let's see. Let me first publish the title so I don't forget. There it is. Boom. There it goes. Whoop, there they go. Whoop, there they go. Title, analysis, backtested, 32 million years. Whoop-de-dingle. All right, traders. So, I don't see any questions. I'm singing. Happy trails to you until we meet again. Happy trails to you, to all our webinar trading friends. Later, traders. Everybody have a safe and a smart weekend. And we'll talk to you on Monday, which will be TGIM. Thank goodness it's Monday. Ta-ta for now, traders. I feel like I should sing another song. Alrighty.